Start, sir.
Respected Chairman, SIRC of ICAI, Chinnamasan sir in absentia, and the Secretary, Gilly sir in absentia. We have been asked to conduct this program on by the SIRC on the program on accounting standard, a series of program and accounting standards. Being the chairman of this year, I'm the chairman of accounting standard, auditing standard, and ethical standards. We have conducted this program. I think this is the third one after the most of the ethical standard we have conducted already. This is the last program, I think so, for this accounting standard. This has been beautifully handled by our office. I should thank our office for conducting this program. I first namaskaram to all the members who have joined this program, and today's speaker Rekha madam. Namaskaram. Members who have joined today, and the speaker. I thank you all for giving the full support to the SIRC, the maximum support you have all given, and the program seems to and we have got a good response from the members also, that the programs are all well conducted and beautifully handled. And today's topic being series 1 of introduction and overview of standards on auditing, and the today's speaker being Rekha Uma Shiv. I've read your full name now. She is a practicing chartered accountant of a 40-year work firm, and the first Kerala woman representing to the SIRC. She's a SIRC member, and this is the first Kerala woman representing SIRC, and the youngest member in the present regional council. Yeah, that we should really appreciate, because I have seen her as a student when I was chairman of the branch. That also she only told me. That's great. Really great, your achievements. I appreciate that. And see, having qualified in electrical and electronics engineer from Kerala University, and being a rank holder in that university, she had come to this course CA, and she had done and she's also a topper, city topper for CA inter exams, and she's expertise in data warehousing, ETL tools with a solid corporate exposures for 6 years as a senior software engineer with corporate giants like Accenture. Fine. And interviewer of key members of campus recruitment team, mentor for Oracle, data warehousing for associate software engineers, research person and faculty for CPE sessions on auditing aspects and standards for the member fraternity with ICAI. She's a guest faculty and review with the board of studies of ICAI, and a nominated member of subject in the specific group for quality enhancement with board of studies ICAI. And she's a faculty for CA, CMA, CS for auditing, direct taxation, enterprises information systems, and having mentioned mentored more than thousands of students across India. This we have seen in Chengalpet branch also. She had been mentoring a lot of students to join our course, and she had done this wonderfully well at Chengalpet branch. We should appreciate her for her effort. And she has empaneled a soft skill trainer with the student skill development board of ICAI, having facilitated various management communication skill courses and orientation and career guidance sessions for ICAI. And she's ex officio of Chengalpet branch, Vellore branch, and Tirunelveli branch of SIRC of ICAI. And she's a chairperson. Presently, she's a chairperson of the Digital Accounting and Assurance Committee and Research and Exposure Drafts Committee of SIRC of ICAI. And she's a public speaker, paper presenter, magazine content writer with ICAI, corporates, and other institutions. All the best, madam. I wish the program the best, and you will all get the best out of madam. Thank you, madam. The forum is yours.
I'm unmuted, sir. Sorry.
Am I audible, sir?
Now you're audible, ma'am, please.
Yeah,
thank you so much, sir. The wonderful introduction. I think the morning we met a few hours back, and now again I'm meeting sir virtually also. Thank you so much, sir. So before I just start with the session, as sir was telling, this year SIRC has planned a 5-day session on standards and auditing. And this is the first session on that particular series. It will be there till 29th, and the speakers will be having speakers are from various locations who have expertise in auditing concepts, and they'll be taking the sessions for you. So today, as a first session, I'll be taking you through a overview. It is not basically an in-depth explanation of any particular standard, but a general overview of the standards in auditing. In the upcoming sessions, the other speakers, the other faculties will take you through specific essays, which will be actually applicable for the audits. So today, as a beginning session, I'll be taking what is meant by standards, what is guidance notes, what are the NAFRA implications, why you have to follow the standards in auditing, and few selected standards and what needs to be paid attention when we are dealing with those standards. So I'll just share the PPT, sir. Just let me know if it is visible.
Visible, please. Continue.
It is visible, sir?
It's fully visible, ma'am. Yeah.
But this PPT is not visible to me.
Okay, you can click on the PPT or else click escape button. A video will go at the back. Escape button, video will go.
Okay, fine.
Now if you click on the PPT, it will be always in front. You continue.
Okay, fine. Okay. So first, when we start with this session, I'll tell you what is meant by standards in auditing. So I think this is one area which doesn't call for much of an explanation, because those who have registered for the session, most of you will be into practice and definitely will have an idea of what these standards are all about. So now, before we actually go on to the standard, there is some relevance that is placed on the standards in auditing. Because if you see, before the coming of the new Companies Act, the standards in auditing was not having the relevance it had now. So we'll see what is the significance of these standards, why it has got immense relevance now compared to older times, what is meant by guidance notes and few other concepts. So basically these are like your guidelines. Basically these standards are basically helping an auditor on how to conduct an audit. So while when we see the auditor's duty, the basic duty will be to give some reasonable assurance. Reasonable in the sense, a very high level of assurance. Say whatever financial statements you are reviewing, you are expected to do it with a high level of assurance, and the basic output is to give an opinion. So this opinion is to see whether there are any misstatements, and the misstatements, there is one particular word related to misstatements. There are material mistakes. So as an auditor, my duty will be to apply the audit procedures, to see whatever audit evidence possible from the given scenario, form a conclusion, and then express an opinion. And now how I express this opinion to the management is through an audit report. So basically, if you see, there are only 4 or 5 components in that whole series. Audit procedures, the audit evidence, then you go for the audit conclusion, the opinion, and how you express it through a report. Now, in the whole process, beginning from applying the audit procedure till you present a report, there should be some guiding factor. There should be something that is guiding a practicing chartered accountant. So these guiding factors are nothing but your standards and audit. Basically, it's like your self-help book. So we have one more area which I will cover, like the guidance notes. Now, these these are recommendatory in nature. That means normally ICAI recommends each and every chartered accountant who is giving a report on the financials to follow standards on auditing. Now, in certain cases, we may not be in a position to follow these standards. We may have to divert a little bit from following the standards in auditing. Now, what I have to do as an auditor is I have to make sure that in the audit report, I have to make this element very, very clear. If there is any deviation or if I'm not conducting the audit in accordance with the standards on auditing, and if there is any material effect because of that, it has to be clearly mentioned. So these are recommendatory in nature. Any kind of deviation from this, I need to make a note of the audit. Now, why I have these standards? Now, everyone, we all of us are very familiar with the accounting standards. So every now and then we see about accounting standards relating to contracts, relating to recognition of revenue, relating to depreciation. We have mostly each and every time we use accounting standards. Now, why not auditing standards? We have a separate significance for that. Now, this auditing standard is basically to measure the quality of audits, how well we are doing the audit. Because this audit is not a one-time or a particular report that is being only used by the management. Say there are n number of stakeholders, including the vendors, customers, the government, the financial institution who lend the money, the bankers, the researchers, the CRISIL, credit rating agencies. There are so many researchers. So all of them are dependent on the report that is given by the auditor. So we are having that extra responsibility of getting or making ourselves accountable to them. Whatever report we give to them should be credible. So we have this utmost responsibility that is showered upon us, and because of which we also may have to make sure that whatever audit we are doing is of utmost quality. Now, if you see, we have the quality review board, we have the NAFRA, any particular autonomous body who is associated with this audit reports. If you see, the first thing, whenever they pick and choose a particular audit report, the first thing they ask is, what is the kind of evidence that you have here? Do you have any evidence to show us that these elements were conducted during the course of audit? Now, when a particular question like that comes, now why do they ask for evidence? Because they want to ensure that the audit has been conducted as per the standards and it has completed or it has pertained to certain quality requirements. So here, basically, it is used for measuring the quality audits. Now, if you see, we have the peer reviews between the firms also. Now, in the peer reviews also, they basically see whether you have conducted the audit properly, whether you have followed the standards, whether you have done proper documentation, whether you have given an engagement letter, whether you have done proper audit planning. So all these are basically to measure the quality of audits. So this again is another implication of auditing standards, and also how much procedures I need to apply. So unless there is some standard or guidelines that is given by the institute, we don't know, we are clueless of where to begin and where to end. So here basically what steps I have to follow. So since I have the standards, I know. Now, before itself I start with an audit, I need to see the basic risk assessment I have to do. I have to start with an engagement letter. I have to plan the audit. I have to plan how much resources I need, within what time I can give the report, what is the mode of communication to the management, what is the deadline within which I have to complete the audit. So all these small elements I'll be able to plan in advance only because these standards. So this is generally what auditing standards mean. Now, if you see a very small synopsis onto origin of auditing standards, I'm not going in depth into it because these are the elements which doesn't pay direct relevance now, but just for understanding. Now, ICAI is a member of IFAC, International Federation of Accountants. So in International Federation of Accountants, they have an International Auditing and Assurance Standard Board, IAASB, and which in turn has constituted the International Auditing Practices Committee, and they have come up with the international standards on auditing. Now, India being a member of IFAC, they are more keen on implementing whatever guidelines that is issued by IFAC. Now, for that particular purpose, they have constituted the Auditing Practices Committee in 1982. Now, Auditing Practices Committee, what they did is, say for example, there are audit reports that is issued by auditors all over the world. But say for example, a person, an Indian chartered accountant, he is issuing an audit report. Now, a person in Netherlands or a person in Hong Kong, when he sees an audit report, he should be able to understand, he should be able to make some sense out of it. That means there should be an uniformity. There should be an uniformity across nations on what is the content in the audit report. Now, for this particular purpose, the Auditing Practices Committee, they have come up with their auditing standards, auditing and assurance standard board, and they can come up with something called as a standards in auditing. Now, this standards in auditing, they made sure that whatever is applicable to India, the relevant customs, the relevant laws, whatever is applicable to India, they actually fine-tune the standard with the customs and the relevant laws applicable to India, but made sure that it is globally acceptable. That means it is in line or par with the international standards. So that is how our standards on auditing came into picture. A very quick overview it was. Now, if you see the standards on auditing, basically it is called as, there are engagement standards. They came up with some standards called as engagement standards. Now, these engagement standards are broadly divided into 5. They are broadly divided into 5 because each and every standard, when I tell you, you may be able to relate because at some point of time you would have used. First, we have the quality control standards. Say SC200 basically deals with the quality control. So we have the quality control standards. We have the standards on auditing. We have assurance standards. We have the review standards and the related services. Now, review, most of us will know because now for listed companies, they have made it mandatory to conduct the review every 6 months. Now, even for say related services, compilation engagements. Now, this is one area which is actually very, very niche. Why I'm saying niche is every time we have some query coming from this particular area, the related services, especially when you sign the provisionals and all, lot of disciplinary cases come into picture. So basically there are 5 different standards: quality control, auditing, assurance, related parties and review engagements. Now, significance, why? Basically, why this auditing standard? So now if you see ICAI in the recent past year, they have made the session on standards on auditing and ethics as a compulsory session. Every practicing chartered accountant, they have to mandatorily, in a year, they have to mandatorily take up these CPA sessions, standards on auditing as well as on ethics. Now, these many hours you have to complete so now why they have made it mandatory is understanding the relevance of these particular standards. Now, before the New Companies Act, the more relevance was given on the accounting standards. Much of the relevance was given on accounting standards. Now, from the commencement of the New Companies Act 2013, especially section 129(1), it stated every financial statement, this is a usual statement you would have seen, there should be a true and fair view and regarding how the affairs of the company are managed, and they should comply with the accounting standards. There is nothing new in that. However, we have section 143, basically deals with the powers and duties of the auditors. Now, section 143 tells every auditor has to comply with the auditing standards. Every auditor has to comply with the auditing standards. Now, here comes the relevance. This particular clause was not there in the previous Companies Act. It was only giving relevance to the accounting standard, that is the section 129(1). Only how the financial statements are prepared as per the accounting, only that particular clause was given a highlight. If you see the New Companies Act, it has also incorporated compliance with the auditing standards. Now, here or this point triggers the significance of standards on auditing. Now, furthermore, if you see same section 143 subclass 10, it also tells ICAI basically recommends these standards. ICAI recommends the standards and the central government will notify. Now, there is another villain coming into the picture. It further says that the central government will notify these standards, whatever is recommended by ICAI, only after it consults with a particular autonomous body. Now, what is this autonomous body or whom they have to consult? Now comes the concept of NAFRA. Or the National Financial Reporting Authority. Now, if you see, there are two subclauses, section 143, 9 and 10. Both deal with applicability of accounting standards or the need to follow auditing standards. And also, there is another body called as NAFRA, which actually monitors all the implementation aspects. So here, it is not just the ICAI who recommends, but the notification happens only after it consults with the NAFRA. So here, from these two sections, you can clearly pull out the significance of auditing standards. Now, why I told this is, there in the recent times, we had a consultation paper with respect to NAFRA. There were so many audit reports that is given by NAFRA, which runs into hundreds of pages, 300 page, 400 page audit report. Now, why they are giving such kind of an audit report? Now, more than how we auditors do an audit, NAFRA follows the standards from the beginning till the end without any compromise. Any kind of deviation from these particular standards, and auditor, if they feel that the auditor has not done the particular audit complying with these so and so standards, then it is taken. And they have each and every point they are discussing in detail where the audit flags or where there is a quality compromise in the audit. Even if you see the quality review board also, they pick and choose each and every point. Now, this is the role of NAFRA. Now we see what NAFRA is all about. Section 132(2) of the Companies Act also tells about NAFRA. What is NAFRA and what is the main role? The basic role or the basic, I wouldn't say powers because powers are different. The basic role of NAFRA is to monitor. They want to monitor whether these particular standards are being followed. So they want to monitor and they want to ensure there is a proper compliance. So proper compliance with what? Accounting standards as well as the standards on auditing. Now, if you see, exclusively for seeing this compliance itself, there is a body. So understand what is the significance that the government as well as ICAI gives on to this particular standards. So in order to ensure the compliance of this particular standard itself, we have a separate autonomous body into picture, which is called as NAFRA. Now, as I told you, monitoring as well as enforcing the compliance, both are there. Now, even central government, I told you, only after having a discussion with NAFRA, they go ahead and accept or notify the standards, whichever is recommended by ICAI. Now, why I'm telling this or giving more importance to NAFRA is in the recent times. In the recent times, it is not for scaring anyone, but it is basically a warning signal. It's basically a warning signal that each and every practicing chartered accountant who is giving an audit report is being monitored. Previously, we didn't have this mechanism of monitoring. We were the sole authority who were issuing the audit report, and our opinion was taken as a sky high one. Now, even there is a body to watch out. So any kind of mistake, I wouldn't say mistake, any kind of quality compromise or any kind of evidence, say appropriateness of evidence, which you don't have during the course of audit, it is being seen. So NAFRA basically it is to oversee. Now, what are the functions of NAFRA? As I told you, recommending the standards to the central government for approval and monitoring and enforcing compliance, basically. Now, why these two things are done? Why they need to monitor and enforce compliance? Basically, to ensure quality. Whatever audit report a member gives, that much of reliance is placed by the stakeholders. For the signature that we give. Now, whatever report we give, it should be of utmost quality, because it is not just used by the management alone. We are not internal auditors. We are also doing statutory audit, forensic audit, IS audit, stock audit. So many audits we are engaged in. Now, whatever audit report we give, it should be of highest quality. There should not be any other eyebrow raised on this particular particular audit report. So because of all this, there is a separate body itself to ensure that these services are of utmost quality. If there is any kind of lacking, they will be suggesting improvements. So basically, these are like, basically they are watching out on the auditors. Now, if you see the powers of NAFRA, now just make this particular slide, I would say this is one of the very, very important slide every CA should know. Very important. Now, first power of NAFTA is to investigate. Basically, they can investigate any kind of professional or any other misconduct from the members or firm of chartered accountants. They are having the power to investigate. Now, how they can investigate? They need not get any representation from anyone. They can directly, suo moto, they can go and investigate. If they get any reference from the central government also, they can go ahead and investigate. If they get any representation from any corporate or a class of bodies also, they can go and investigate. So the power to investigate is kind of unlimited, not only from the central government and not only from the corporate, but on its own also, if it feels that the quality requirements are not adhered to, the audit is not conducted properly as per the standards on auditing, they can go ahead and investigate. So this is the ultimate power of NAFRA. Now, this is not it. We have a list, we have some more powers of NAFRA, which is even little, I would say even little worse than this. All the powers, whatever is vested in the civil court is vested in NAFRA. Now, it also has the power to impose penalty. Now, this is a very beautiful clause. You see, it has the power to impose penalty. Now, penalty in the sense you'll be thinking, yes, if you're not doing a filing, we'll have to pay a few thousands and just finish it. No, the penalty is not like that. The penalty here for a member, it starts from rupees 1 lakh. Starts from rupees 1 lakh. It may extend up to 5 times of the fee received. 5 times the fee received. So whether we get the audit fees in on time or not is a different issue, totally different issue. Whether we get or not, the penalty is 5 times of what we get. So here for members, for individual members, the penalty is starting from 1 lakh up to 5 times the fee received. Now, for firms, it is even worse. It starts from 5 lakh. The penalty starts from 5 lakh rupees. Penalty starts from 5 lakh rupees up to 10 times the fee received. Up to 10 times the fee received. So basically, the penalty is very heavy. For members, it is 1 lakh to 5 times the fee received, and for firms, it is starting from 5 lakh to 10 times the fee which is received. I think mostly it should be receivable because we don't receive the fees on time. So, but it is received. Whatever fee we receive, 5 times and 10 times of that. Now, it doesn't stop with this. It also has the power to debar a member from practice. Debarring a member. Now, this actually calls for a discussion because since NAFRA being a separate autonomous body, whether it can debar a member from practice is a question, but however, it can debar a member from being appointed as an auditor for the company. Now, how much is the period? It starts from 6 months. It starts from 6 months. It can go up to 10 years. It starts from 6 months. It can go up to 10 years. Now, understand this very, very carefully. 10 years is not a small period. Say some kind of mistake or omission or negligence from the part of the auditor. I wouldn't say mistake, mostly it could be a negligence from the part of the auditor. Now this calls for a debar. Now debar up to 10 years. Now even 1 year itself, if we get debarred also, it is again very, very difficult to get revived or get start a practice again. And most of the other empanelments will be disqualified. Whenever there is an action taken by your CNDG or NAFRA, most of the audits will be disqualified. So this is one very, very powerful power of NAFRA, debarring a member. So basically, they can go for penalty, they can impose a penalty, they can debar a member, and also they have the power to investigate. So this one particular slide, I think this is actually if you see this particular slide, every power of NAFRA is being elaborated. Now, any kind of negligence or professional misconduct It could be either knowingly or unknowingly. If it is done by the auditor, it calls for an action. So previously, 10 years back or 20 years back, this was not as effective as it is now, because it is a recent one, and previously we didn't have any person to watch out upon the auditors. Whatever we give was the ultimate one. Now we have a separate authority to oversee us, so it is time for us to be very, very careful. Now, compliance, as I told you, each and every member of ICAI has to ensure that the standards are followed whenever they are auditing any financial statements, and also they should, any kind of a material departure, as I told you, if they are not following the standards in auditing, they have to make a reference in their audit. Now, this is a basic overview. If you see, I have told you about what is standards, what is the relevance of standards, or why we need standards in auditing, what is the significance of standard from the New Companies Act, when the New Companies Act started. Then I told you about what is NAFRA, what is the implications of NAFRA, what are the functions of NAFRA, what are the powers and duties of NAFRA. And one more thing before I go on to the standards, there is one more element called as guidance note. So I don't know how many of you refer regularly to the guidance note, but as students, we used to have a book which we very rarely touch, a very bulky book which we very rarely touch. So what is this guidance note? Basically, it's like a dictionary. It's like a self-help book for the members. Any kind of assistance a member requires when he is doing an audit, how to do an audit, what procedures he has to follow, how he has to conduct the audit, what kind of report he has to do, everything very, very detailed is given in your guidance. So basically, this I can tell is a self-help book for the audit. If you are new to audits, if you are new to audit, starting the audit for the very first time, I think this is one book that we have to go through. Now, starting with the overview, I'll slowly move on to some standards. Now, these standards I have just picked and chose depending on the relevance of the standards. As I told you, this is a session for overview on auditing standards. Basically, most of the standards which is of high relevance I have picked and chose. Now, the other sessions on this particular series, the speakers will be taking the relevant essays and describing more on that. But here I won't be going into an in-depth discussion, only the important or highlighting features of that particular essay which you need to pay attention. Now, first is starting with SC200. What is SC200? So to read or to understand the description of the essay itself is like 1 or 2 lines. Overall objectives of an independent auditor in conduct of an audit in accordance with the standards in auditing. Now, to by heart this particular standard name itself, it will take 1 day. Now, what is meant by SA200 or what is included in SA200? Now, basically, it tells about few keywords. First keyword is reasonable assurance. What is reasonable assurance? It tells about materiality. What is materiality? We have a separate session, but materiality also touches upon the concept of materiality. What is misstatement? What is professional skepticism? Few elements in this particular standard. Now, I'm not going in depth. Reasonable assurance, as I told you, as an auditor, I need to make sure that I have a reasonable assurance. I obtain a reasonable assurance. Now, what is this reasonable assurance? Is it ultimate one or is it conclusive one? It is not conclusive. If I'm saying absolute assurance, if I'm telling absolute assurance, that means it is a conclusive one. See, if I have to give some certification, it has to be true and correct. Nothing, no kind of deviation is allowed. It has to be true and correct. Like your tax audit report on 3CD. Now, here it is reasonable assurance. Reasonable assurance in the sense, it is a high level of assurance. It is a high level of assurance, but not a conclusive one. It is not a conclusive. I cannot say it is absolute. It is a high level. It is a very high level of assurance, but it is not absolute. Now, these kind of assurance I give it for audit because I cannot vouch on each and every rupee in a particular audit. There could be some variations, but only thing I have to check is these variations or these misstatements. Misstatement, this is what it has to be and what it is. What it has to be and what it is. If there is a difference, then it is called as a misstatement. Basically, it can be due to error, by mistake, omission, carry forward errors, arithmetic calculation errors, it could be anything. Or it could be purposefully manipulated or intentional, or it is fraud. You can say basically fraud. So misstatement is what it has to be and how it is reported. Now this could be either by mistake, as I told you, omission, carry forward errors, arithmetic errors, it could be anything, or it could be done purposefully, purposeful manipulation, purposefully done fraud, anything. Now there could be misstatements. That is the reason I'm giving a reasonable assurance. However, I have to make sure these misstatements are not material. These misstatements are not material. Material in the sense, whatever opinion I give, I already repeated, that is given full reliance by the stakeholders. Now, if I am giving a report and any stakeholder who relies on my report is taking a decision based on my report, that is a huge thing. Now, if I give a wrong audit report, say the company has overstated the profit is only 50 lakhs. The company has overstated the profit as 2 crores. Now, I have given an audit report without collecting sufficient appropriate evidence, without, there is a negligence, sheer negligence from my part, and I have given an audit report. Now, seeing or looking on to this particular audit report, a stakeholder or a shareholder is investing in the shares of the company. That means his decision is influenced by the report I am giving. When I have vouched for the 2 crore profit, when I have given an opinion, when I have given a clean report and I have said this 2 crore is a profit, you can go ahead. That is an assurance that I give to a stakeholder. Depending on that particular assurance, a particular stakeholder has invested on that particular company. Now here, my report has actually affected the decision of the stakeholder, but it is not in the right way. Now this is called as the material, whether it is affecting the decision of the stakeholder. Now I have to make sure that there could be misstatements, but it should not be significant. It should not be material. It should not affect the decision of a particular stakeholder to prompt him into investing something, placing reliance on my audit. So first is reasonable assurance, second is materiality, and third is misstatement. And the ultimate one here for this particular session is professional skepticism. So professional skepticism basically, if I tell you, any audit we go, I think most of us have this as auditors, it is already inbuilt in us. Without any proper justification, we are not going to accept nothing. So it is not like you go questioning them randomly, but you question in such a way that whatever answer they give, if there is no proper justification, you are not going to accept it. So there is a proper professional skepticism should be there, proper analytical, critical thinking should be there. Just like that, there are some evidence, you do the vouching, you see, okay, the reconciliation has been done, you go and give the audit report. No, that is not expected from us. That can be done by an accountant. As an auditor, you have to go or apply one level. That means you have to have the professional skepticism. Assess the risk. Assess before even taking up an audit. Understand what are the risk points. Understand about the entity. Understand about the shareholding pattern. Understand who are the members who are in the board. What kind of industry they are pertaining to, what is their business, what are the investments they have made, what are the risks that is affecting the industry. Take up an audit, see whether the controls are proper. If the internal controls are proper, yes, half the work done. If internal controls are not proper, then your work starts. Then you have to go in detail and check up in detail. Now, these are all coming under your professional skepticism, basically the questioning attitude. You don't accept anything without a proper justification. Gather as much evidence as possible. Now, this evidence already I'm taking it as a separate essay today. Now, before that, I'll tell you just one small aspect with respect to evidence. That is, getting the evidence is not enough. Say that particular evidence is there. You have a good quantity. You have so many evidences stating, okay, this is done properly. Whether it is reliable, whether it is relatable to the audit, whether it is relevant to the audit, that we need to check. So sufficiency should be there. At the same time, it should be appropriate. It should be relevant. It should be reliable. So quantity wise also, I should be satisfied. Quantity wise also, quantity as well as quality, both should be sufficient. Then Forming an opinion. As I told you, initial procedure I told you, procedures, evidence, conclusion, opinion, and then reporting, depending on whatever audit evidence you obtain. Having or maintaining your professional skepticism, whatever conclusion you reach, you give it. So these are basic responsibilities. So in SC200, if you see, the basic elements will be reasonable assurance, the materiality, the misstatement concept, the skepticism, and then of course we have some inherent limitations in audit, which I'm not going very deep. Basically, it could be depending on the nature of financial reporting, how you have to report, depending on the applicable financial reporting framework. We don't have the same financial reporting framework for every. Depending on the entity, for Companies Act, we have Schedule 3 of Companies Act 2013. We have, as per Banking Regulation Act. So we have a different, totally different financial reporting framework depending on the regulator. Then audit procedures. You may not be able to apply all the audit procedures in an audit. It may be sometimes impossible. You go for a ice cream manufacturer. You want to take a stock count. It is literally impossible to go and take a stock counting at a minus 1 or 2 degrees. So you have to rely on the procedure that is accepted by the management, or how the counting has been done by the management personnel. So the nature of audit procedure also poses an inherent limitation. Now, third one is a very, very common one, which each and every one of us will be able to relate: benefit and cost. Okay, so now this particular third point, if I had to say, now I think each of you would have experienced it better than me. Any audit you go, any audit you try to give a financial bit, there will be 10 others who are giving much lesser quote than you. So sometimes I'll even have a doubt whether I can even conduct an audit without a loss. Means I don't expect a profit or even break even, but at least there should not be loss when I go and conduct an audit. So depending on how much resources I deploy, how much travel expenses, TA, DA, everything, what is the effort that is put into a particular audit, there should be some correlation between the cost and the benefit. So this again, nowadays, most of the audits, it is lacking because of undercutting by the, I'm not blaming anyone, but it is again, we ourselves are doing. So there should be a balance between benefit and cost. Then coming to fraud. Fraud, as I told you, if it is done, especially at the lower employee level, say by accountant level, somehow you will be, or you may be able to bring it to the limelight. Similarly, normally fraud is very, very difficult to detect. Purposefully, they are manipulating, especially when it's done by the senior management, very, very difficult to unearth. Now, this is again another inherent limitation of audit. See, depending on whatever evidences they give or whatever documents they share, whatever information they provide, based on that only you are conducting an audit. Basically, it is only an audit, not an investigation. It is only an audit, not an investigation. Investigation means you're trying to establish some fact. Here, I'm not trying to establish any fact. I'm only trying to get some evidence so that I can give an opinion or give an opinion on the audit report. Now, here, if you see, fraud, especially in an investigation, there is a time. You can take your time to prove that it is a fraud. But here we have a limitation of time. We have a limitation of resource. We don't have so many powers as an investigator as it is an audit, not an investigation. So basically, it is only auditors. We are only watchdogs. We are not bloodhounds. So here, fraud again is another important limitation in an audit. Then non-compliance with the laws and regulations, every now and then it happens, and we are the persons who actually pinpoint that and advise that to the management. Then again, going concern assumption. Say there could be threats to the going concern assumption. There could be, even when the pandemic came, the best example would be when the pandemic came, all the say for example, there were holiday planners which actually plan your vacation. Now, for the past 2 years, during the time of COVID, this was one industry that was very, very badly hit. So many of the holiday planners they actually started winding up their business because they were not sure of what is the future ahead for them. Because in going concern, will be only taking into consideration the next 1 year, not in the foreseeable future. Is not like forever. It is for the next 1 year. Next 1 year, they were not able to predict whether the economy will come back to the normalcy, whether people will be able to move out, whether the lockdown will be raised, where the conditions which was used to be before will come back. So again, there are future events which actually possesses a threat. Then the nature of audit evidence obtained. I told you, audit evidence is never conclusive. It is never conclusive. I cannot say it is complete. It is only persuasive. It is only an intermediate one. Whatever I get, it is an intermediate. Say, I cannot say it is 100% foolproof. There could be little bit changes here and there. So these are all inherent limitations because of the nature of audit evidence also. Say sometimes whatever I get, I am not able to get a full-fledged evidence. I am not able to get a written audit evidence. I may get an oral evidence. Or say I may be have to depend on third parties. Say I have to get a confirmation from the vendors. I have to get a confirmation from the bank manager. So nature of audit evidence also possesses an inherent limitation. Then we have the next essay. So before I go to essay 210, the basic concept again: reasonable assurance, material misstatement, materiality, professional skepticism, and the inherent limitation. Now, the next essay is essay 210. So whatever essays I have picked, it is basically the importance, taking into consideration the relevance of the essay I have. Essay 210 is basically like, say, any chartered accountants are recently qualified, attending the session, you would be knowing, whenever you go for a campus placement conducted by ICAI, when you get the offer letter, when you get an offer letter, if I ask you, I can say, I have got placed in so and so company. But that doesn't mean you are employed or you are an employee of the company. You have just got placed. That's it. You have got placed. You are not an employee of that company. When you become an employee of the company is when you have accepted the offer of appointment given by the company, whichever has selected you, you are accepting that. You are given an orientation and onboarding process and then taken into that particular company, then you can say you become an employee of the company. Until then, you have got placed into that company or I have got an appointment of the company. That's it. Now, why I am telling this is, same thing applies here also. You are getting an appointment from a company being appointed as an auditor. That doesn't mean you can say that I am the auditor. You have to accept that. You have to accept the appointment. Say consent of the auditor, they have to file with the registrar. They have to file the consent of the registrar and few other details. Now, here, before you accept, why don't you give something to the client or to the company or to the entity where you are appointed as an auditor, describing or in detail giving points which require clarification. Say you have some doubts on the scope of audit. You need to clarify with them regarding the fees. So this is one element you definitely have to include in your terms of engagement, because at the end there could be some kind of an argument regarding the fees. So how the billing is done, what is the fees, how you are reporting the weakness, any control weakness is there, how you are going to report to the client, when you are planning to submit the audit report, which area you are going to audit. You have to make sure that the client and the auditor is in the same line. The client and the auditor is in the same line. See, whatever preconditions are there. So I cannot just like that walk into a company and do an audit and then give the report within 2 days. I need to make sure that whatever the management has to do, they are doing it. Now, what the management has to do? They have to make sure they are prepared the financials properly in the sense they are preparing the financials as per the applicable financial reporting framework. If it is a company, as per the Schedule 3 of Companies Act. Now, if there are still entities which is preparing the balance sheet in the old form. Now, can I go and audit that? That is a precondition I need to set. I need to set my expectation. I need to tell them, arrange the vouchers, serially number, keep with you ready the fixed asset register, the investment register, the list of creditors. All I am supposed to do is do and do the audit. I need not waste my time arranging the vouchers, waiting for the fixed asset register or cash book to arrive. Just waste 1 week of our time for that. All these are preconditions. They have to do it beforehand. My only duty is to do the audit sincerely with utmost skepticism, do it independently, make sure I gather all the evidence and then give the report. I am not supposed to waste the time on these elements. So here I am trying to establish what are the duties the management has to fulfill before I start with the audit. Then I also have to see whether there is a common understanding. Sometimes as an auditor, when they appoint an auditor, most of the cases it happens. They expect you to do everything. It's not just the audit. Consultation will be there. Even when the finance person is on leave or the finance person resigns, then you have to take a part of the operations and do. So be very, very clear with the scope of work. What I am supposed to do, what is my area of duties. There should be a common understanding. So in case any extra work or any extra assignments or services, how the billing has to be, all the things have to be clear. So basically what I can include in the engagement letter is what is the scope of audit, what are the preconditions, as I told you, what they have to be ready with before I start with the audit, what are the limitations. I have to tell from my part also. They should not expect that whatever report I give, it is based on whatever evidence I have got, I am giving the report. If you have not given me the right information, which you have, or if you had hidden some information from me, then it will actually affect the kind of opinion that I give. See, depending on the cost, I said cost benefit analysis. I have to put out the fraud areas. If there is a fraud, whatever report I am giving, it will be only limited. I cannot go and predict a fraud. I'm not doing an investigation. It's only an audit. So inherent limitations in the audit also have to convey to them. Then, if there is any control weakness, as I told you, check for the controls. Do the risk assessment and check for the controls. If there is any kind of a control weakness, what I or how I am going to communicate. Now, there will be a letter of weakness given to the management. That also I need to include. Then, management representation. Now, this again we have a separate essay for this management representation. Now, why I'm telling this is most of the management or clients, they towards the end of the audit, they just postpone giving the written representation. Even if you start the audit and tell them, they'll be just prolonging this particular process, and at the end of the audit, most of the times they will be hesitant to give this written representation. So put it out in the engagement letter itself that they have to provide a written representation. It is not a full-fledged evidence, it is only an add-on, but however, to prove that you have done the audit correctly, there is no negligence from your part, this is an add-on. So make sure that this is also being included in your engagement letter. Then, as I told you, the fees, the billing details, and also requesting the and basic thing. After you give all this, one major area is all this you have included in the engagement letter. Now you need the management to acknowledge that. So without the last line, whatever you have included is baseless. So once you give this particular engagement letter, the immediate action should be they have to acknowledge, they have to accept that. So that is when the understanding comes between the client and the auditor. So there should be a proper understanding or acknowledging the engagement letter that is happening. Now, after this, there is one question that is commonly asked. Say, as per Companies Act, I can be the auditor for 5 years, 5 consecutive years, starting from the end of the first AGM to the 6th AGM conclusion. Now, every year, should I go ahead and give a new engagement letter? Or say, for example, as per Companies Act, CARO clearly provides what are the elements I have to do. What are the areas I have to check, whether I have to check for Benami transactions, whether I have to check for willful defaulter clause, whether I have to check for inventory or valuation, everything is clearly given. Now, since it is very clearly given in the CARO, should I go ahead and again give an engagement letter? Answer is yes. Even though there is a proper clarity given by the statute, it is always a good practice to go ahead and give an engagement letter. Because tomorrow they cannot say that, okay, these things we were not aware, or there should be a proper understanding before you clear the things before you start the audit. This is one thing. Now, during the course of 5 years, like when you are appointed as a stat auditor of a company, do you have to give the engagement letter every year? If you want, you can give. But it is not necessary that you give it every year, unless there is some kind of a change in the scope or change in the board of directors or change in the any specific function that you are expected to. They have revised the terms of engagement, then you have to go for a new engagement letter. Other than that, your old engagement letter would surface. So especially recurring audits, if you see repetitive audits, it is not necessary to give a engagement letter every year. However, when there are some conditions, like say for example, they have revised the terms of engagement. Now they have added one more area to your blog. You have to conduct pre-audit also. So for example, there is some change in the senior management, the old management who was there when you started with the audit, they were well aware of their duties. The new management is not aware of what they have to do before the start of an audit. So you need to make them understand, okay, these were the things that has been done by the previous management. These things are expected from you. Now, there is a change in the ownership. The company has been taken over by another company. There is a demerger. There is an acquisition. Now, again, you have to make sure that you are giving a new engagement letter. Similarly, there is a change in the legal or regulatory compliance. Say, for example, 2017 GST was introduced. Now, this is an additional scope that is coming into the audit to verify that part also. You have to make sure, or you have to make that, express that in the engagement letter. Then change in the nature or size of the entity. Company expansion is there. There are new areas to be covered in the audit. The work has increased for the auditor. Go for a new engagement letter. Say similarly, there is some changes in the financial reporting framework. You have to make sure that the management is well aware of that, because they are the persons who are preparing the financial statement, not just preparing as per the applicable reporting framework. Now again, go for a new engagement letter. And similarly, whenever there is a change in the requirements. So say for example, even whenever there is a misunderstanding, say old engagement letter, they have not understood it properly. So 1 year you somehow carried on with the audit. Next year, before you start off with the audit, go for an engagement letter, clear or make a clear understanding of what is required from their side and what you are going to do. So it also includes what are the functions as an auditor you are going to deliver them. What is at the end of the day, what you are going to deliver them is also included. So all these are the circumstances when you go for a new engagement letter. So I think in this particular standard SC200, the highlighting points would be the need for an engagement letter, as I told you. Even if the terms are very, very clearly defined by the statute, it is always important and a good practice to go for an engagement letter. Engagement letter should basically contain the responsibilities of the management, what are the preconditions, what you are going to do, what are the expectations, the billing detail and the fee, and the mode of reporting, basic understanding. And another important element is giving an engagement letter is not enough. Getting a acknowledgement from the client is the most important. And when you have to go for a new engagement letter, what we discussed now. Now, so these are two standards we covered. The next standard is SC200, which is called as audit documentation. I would say this is one of the very, very vital standards in the entire standards. Very vital one, very, very vital one. So there is a saying, especially in corporates, those who have been working in corporates come to practice, you would be knowing it very well. Any element, any one single piece of work you do, it calls for an email communication. Anything, it calls for an email communication. Now, if you see the ROC compliances itself, for each and everything, there is a filing happening. Now, why do we have to do that? Because when you are not documenting, means it is equal to you are not doing anything. Say tomorrow there is an appraisal happening at the company. The senior manager is coming and asking you, what have you done for the whole year? And the time given is say half an hour for a particular person. You should be in a position to tell what all you have done for the whole year. Now, how you'll be able to do is properly document the things you have done. Similarly, in an audit also, there will be some procedures that we apply, we collect some evidence, we reach some conclusion. Now, what is the evidence that we have done the audit? Unless we have documented it. So documentation, if you see, whatever procedures you apply, whatever evidence you collect on a daily basis, say you are deploying 5 resources for the audit, make them create a working paper, make them sign on that, make them accountable. Tomorrow, if there is any issue or any kind of a question raised on the negligence on the part of the auditor also, you should be in a position to answer that, sustain. Now, not only makes them take the accountability, also you will be having an idea of how the audit is progressing. There is a proper documentation. You ask them to send the end of the day status along with the working paper. You know what areas they have covered, how much work is pending, how much time it takes to complete the audit. Everything you get a clear idea. So here basically what audit procedures you are applying, what evidence you are collecting, and what conclusion you have reached. All these things you have to have a record. Now basically, as you all know, audit documentation is also called as working papers. Now say entity has a company, they are keeping the financials, they're keeping the books of accounts, they're keeping the balance sheet, P&L, trial balance, everything is there. Now can I say I'm getting a copy of all this? Can I say, okay, this is the documentation that I have? Entity's accounting record is a separate thing. That is something they have to maintain statutory. Audit documentation is solely the purpose of the auditor. It is to prove how much work you have done, how you have done the audit, how you have conducted the audit. Tomorrow there is a peer review on your phone. Tomorrow there is a query raised by the quality review board. Tomorrow there is a report on the NAFRA. You should be in a stand to prove yourself. How do you prove yourself? With the working papers. So basically, these are not just prepared, there is a time retention also, how long you have to retain. Now if you see, if you are especially in government audits, these working papers play a very pivotal role. So especially in my personal case, if you see, there is a separate room that is devoted for dumping all the working papers, because there is a period for till what you have to retain the documentation. So until then you cannot even. Now next is working paper classification. Basically, working papers are classified into current as well as permanent audit file. Now, permanent and current audit file, I think most of you will be knowing. Permanent is whatever is required for a future reference. It is not just limited to this particular audit. Whatever is required, even for the upcoming audits also, it will be put under permanent audit file. Say, for example, the MOA. The articles, the memorandum, these are not just required for that particular audit. Even in the future audits also, you may have to refer to this. So you have a permanent audit file. Then you have the current audit file. Whatever I require for this particular audit alone, whatever I require for this particular audit alone, I'll put under current audit file. Now, current audit file is basically whatever procedures you apply, whatever evidences you got, whatever communication you make with the management for that particular year regarding the audit. All this you put as a current audit. Now, inclusions, basically you can go through what all is included in the audit documentation. As I told you, audit planning, you plan the audit, you come up with an audit program. Now, can I include it in the documentation? Yes, you need to. Tomorrow there is any kind of investigation on how we have done the audit program actually will prove that how you have planned the audit, who all were in charge, what you were doing each day, which areas you have covered, what kind of discussion you had with the management, where the follow-up was there, whether they have completed what they have assured. All these things will be there in your audit program. Any kind of analysis you do, issues, memoranda, any issues that come up during the audit, which you make the management notice. Again, that also you have to report. Letters of confirmation, representation. I told you already as a part of SC200, I told you the importance of getting a management representation. Significant matters that come up in the audit. Summaries of that. Checklist. What all areas you have covered. Say internal control checklist also will be there. All this you put as a part of your documentation. So any kind of correspondence also will be there. So all these are basically what we include in the documentation. Now, this is again a very important PPT. Now, I told you this documentation I have to retake. Now, whether this particular assembling, say now we all have laptops, say when we go for audits, now it is a normal practice that whatever information we get, we tend to put it in the desktop. Say after a week, we see there are so many number of documents in the desktop. It is like very cluttered. We don't know which it pertains to which audit. Now, normally what you do is you create folders. Whatever is relevant for that particular audit, you put it in the folder. Similarly for the other audits and so on. Now, there is a similar process in audit also. There is a similar process in audit also, which is called it assembling the final audit file. Now, what is this assembling the final audit file? Is it a part of audit? No. It's a very purely administrative process. Once I have given the audit report, once the documentation is done, once I have given the audit report, I'll start with this. Whatever documentation I have collected, I'll start assembling in an audit file. Now, why I have to do this is initially I mentioned about quality control standards. I mentioned about quality control standards. Now, in the quality control standards, SC200 is SQC1 especially tells the firms what practices they need to follow when they are going for an audit. That means they have to establish some policies when they have to complete the assembling process and for how long they have to retain. So every firm who is conducting an audit, they have to have some policies. How they are going to assemble this particular audit file, how they are going to put all the evidences and documentation relating to a particular audit in a file. Now, how long I have to retain this? Now, this is a challenge. So, what the standard says is you have to retain it for a minimum period of 7 years. Minimum period of 7 years. Now, 7 years starts from when? It starts from the date of auditor's report. Now, it is a joint audit. It is a joint audit. It's a group audit. Now, in a joint audit, we all know it is not necessary they all should agree for one single opinion and give a single audit report. If there are 5 auditors in a joint audit, each of the auditor has the liberty to give their own audit report. Each of them has a liberty to give their own audit report because it is an independent auditor's report. They have the independence to express their view depending on whatever evidences and expertise they have the liberty to express. Now, when it is a joint audit, say there are 5 auditors, one auditor is giving the report in Jan. The last auditor, say he is giving the report by February. Now, this particular standard says in a joint audit, this period of retention, 7 years, it should not be less than 7 years, I told you. This is from the date of the last auditor's report. Say in joint audit, the last audit report is given in the month of February by one of the auditors. From that period, for 7 years, you have to retain. That means it is not like any one person is giving the audit report and you take from that date 7 years. In a joint audit, when that last person is giving the audit report, from that date, you have to calculate 7 years and get the audit report. So this is basically the assembling of audit files. So basically, I told you it's a mandatory process. SQC1 actually mandates every audit firm to create policies in this particular aspect, how to retain the documentation and to what period they have to retain the documentation. So this is again another important aspect with respect to documentation other than maintaining an audit documentation. Now, so here if you see, the basic element is this particular PPT, the importance of documentation, what you need to document. Second is assembling the final audit file. Now coming to the very crucial aspect, ownership of the documentation. Now, who is the owner of the audit documentation? So very vital. Say, why I am telling this is just I'll share my personal experience here. So we all have this new article trainees or interns who are joining the firm. So what, as our initial after initial few days, we start giving them some work, especially we ask them to go along with an audit senior or a partner to accompany them for audits, to get an audit experience, to do for vouching, do the basic elements. Now, this is one area which actually happened. So there is one article clerk of mine whom actually I have deployed for one of the audits, and she was doing the audit for quite some time, say 2-3 weeks passed, and there are entities, I think most of you would have experienced this also, there are entities who purposefully delay in giving us information. Even if we have started the audit, after 3 or 4 weeks only we'll be getting the information. So very difficult to extract information from them. Now this particular article trainee was also continuously working for 2-3 weeks, and finally she went and asked for the information because it was such a delay from the part of the client. Now, when they are not giving any information which they are supposed to give at the right time, they try to confront. So they directly went and asked the girl, like, what you're doing for these many weeks? You have been coming for past 2 weeks. Show us what you have done till now. So you are just asking us the information. Now prove us what you have done till now, so that we will also be in a position to give you information. Now these new trainees, they are not very much aware of the small intricacies. And what, out of all the enthusiasm, she went and showed whatever she has done till now, whatever audit evidence she has collected, whatever she has whatever query she had, everything she has shown to that particular client. So there were some serious manipulations, from serious errors. I wouldn't say errors, some serious areas which needed attention. Now, what happened was, once these queries were raised by the particular girl to the client, before I was supposed to visit next week, before like that 1 week itself, they made sure that everything was right, all the books were revised, everything was done. Now, if you ask me, I have asked her to make a note of what she is doing. I have asked her to sign the working papers, whatever she has been doing. I had fixed accountability on her, asked her to document whatever evidence she collected, she documented. But one basic element I forgot to tell her. Now, are you supposed to reveal these things to the client? It is your own property. Otherwise, I can tell in another way, the ownership of the documentation is only with the auditor. It is only with the auditor. It is the discretion of the auditor. It is at his discretion. He can see whether I need to share this or not. If the auditor doesn't want to share the audit documentation, there is no compulsion. The management or the staff auditor or any person, CFO, they cannot compel the particular auditor to share the audit documentation. It is only the discretion of the auditor whether he need to share, whether he need to share some portion of the documentation. Now, even one more thing which we have to be careful is, when we are sharing this part of the documentation with the client, which is absolutely not necessary, but if we feel so, we can do. But once we share that, we have to make sure that it is not affecting the independence. We are not being influenced because of the documentation that is being shown to the client, or it is not undermining the work that I'm doing. Say, they should not feel that I haven't done anything. Maybe that calls for more evidence to be gathered to arrive at a conclusion. So whatever audit documentation you share, it should not affect your independence or undermine the work you have done. So ultimate thing is, ownership of the documentation lies with the auditor. Only he has the power over that. If he feels though, he can share with the management, but there is no compulsion for it. So this is one basic or major area in audit documentation. Now, moving on to the next essay, which is essay 500. So this essay basically I'll run through, because this essay, all these essays will be again taken up by the various faculties we have in the upcoming sessions. Now, essay audit evidence, what you have to collect. Now, both are there. One, whatever you obtain from the accounting records, and there could be other information. Say, for example, minutes of meeting doesn't fall in the accounting records category. Your journals, vouchers, invoices, performer invoices, trial balance reconciliation, all come under accounting records. Say your MOA, AOA, legal deeds, your minutes of meeting, all those things come under other information. So whatever is relevant for giving an opinion for a particular audit, even it comes from the part of accounting records or other information, you call it audit evidence. Based on this, you go ahead and give the opinion. Now, two basic elements. Now, if this particular PPT is covered, now the audit evidence is almost half done. I can say almost fully done also, I can say. Two things. One, we already covered: sufficiency and appropriateness. It is not enough on the quantity of audit evidence you collect. Irrespective of the quantity, go for sufficiency of audit evidence. Go for the appropriateness of audit evidence. Appropriateness in the sense, the audit evidence, whatever you collect, should be reliable and relevant. Reliable means, whatever is the source document for that, it is genuine. It is from a genuine source. It is reliable and relevant for the audit. Say something that is totally irrelevant for the audit, I need not keep it as an audit evidence. So two things, quantity and quality. When you check for quality, make sure you check on the genuineness of the audit evidence. That is the reliability part and the relevance of that particular audit. Now, second point also we discussed. It is persuasive rather than conclusive. Conclusive means what? Absolute. There is nothing more than that. So whatever audit evidence you obtain, that is the final one. You cannot argue beyond that. Whereas persuasive means it is only an interim one. Now, as I already told you, audit has a lot of inherent limitations. In these inherent limitations, you cannot expect the audit evidence to be 100% correct. There could be, you are getting from, say, within the management, you might get the audit evidence which may or may not be trustworthy. Sometimes you may get from other persons, say for example vendors, from creditors, from financials or financial institutions. Again, there is a percentage of persuasiveness. It can be, it may not be absolute. There could be slight variations in the audit evidence you give. So audit evidence is always interim. It is not absolute. That is one, again, another important aspect attached to why I'm saying this is, say if you go ahead with an investigation, what audit evidence, what evidence you collect is a conclusive one. There is nothing beyond that. But in audit, because of inherent limitations of audit, there is a possibility that it could be, it need not be complete. Now, audit procedures, as I told you, two methods, risk assessment and further audit procedure. Risk assessment, before I start with an audit itself, I'll go understand what are the risks associated with that particular audit, understanding the client, understanding the industry, understanding the people who are in the board, understanding the governing structure, understanding what are the recent investments they have made, what are the allegations against the company. All this come under the risk assessment procedures. Say what industry they are pertaining to. Automobile industry, pandemic times they are quoted zero profit. So what is the risk associated with them? Oil industry, recreational area. So what is the cosmetic industry? So what is the risk associated with the industry? Now further audit, this is before. Now one basic difference between risk and further audit procedure is, risk assessment procedure is something that normally we do before we start with the audit. Before we start with the actual audit procedures, we do the risk assessment procedure to understand the entity. Now there is a separate standard here, understanding the entity, understanding the risk assessment by understanding the entity. There is a separate standard. Now here also I'm including that risk assessment procedure. Now other audit procedure, if you see, there are two things. One is checking the controls. If controls, that is a compliance procedure, whether the company or the entity has complied with all the control aspects. Say whether we have this ISO certifications. That means they have a set of norms which the company has to comply to see that they are having utmost quality. So similarly, there are compliance procedure. It could be relating to legal, it could be a risk, it could be IT, information technology. What is the control they are having in place? Now, sometimes the controls maybe very good. You need not have to go. When the controls are very good, that means the work of the auditor is little bit reduced. That means they can place relevance on this particular control. So in those times, they need not go for in-depth testing or in-depth procedures. So whenever your controls are strong, you need not go for substantive procedures. But say, for example, you don't have reliance on the controls. You don't trust the ethics of the management. You don't trust the governance structure. So in those cases, you go for substantive procedures. That means you are doing in-depth testing. You are testing in detail. Checking account balance wise, we are checking each and every account balance. So those kind of testing you do only when the controls are not proper. So here, test of details also contains your analytical procedure. So analytical procedure is not just whatever you get from the accounting records. Basically, you try to relate. Say relate in the sense, say you have the interest. Say the company has taken a loan. Of course, there should be an interest amount that is debited to your P&L. Similarly, so these are basic reasonable checks that you can do. Whenever there is a loan, there should be an interest amount that has been debited. Say when you have some waste material, say, or say for example, sales. there has been some sales that is being done by the company. There is also commission that is being given for the sales or discount that has been given for the sales. You cannot expect the discount to be more than the sale value. It should be definitely less than the sale. These are basic checks that you do. Say if you go for rent, first rent means you cannot go and say the rent is debited every alternate months. Normally it will be like every month. So there are basic reasonable checks with it. Maybe it could be cash to cash or non-financial elements also. These are analytical procedure. You compare the gross profit ratio of the previous year with the current year. You check whether there is any decline in profit, if there is any specific trend being shown by the previous financials, whether the profit is increasing or there is a sudden jump. All this comes under your analytical procedure. So these kind of detailed testing analytical procedure you do only when your controls are lacking. Now, basically here if you see in audit evidence, the basic SA500, I told you sufficiency and appropriateness, persuasiveness and conclusiveness, two things you have to be careful about. Then method of collection, test of controls as well as your substantive analytical procedure. When you go for test of controls and when you go for substantive analytical procedure. Say one small example I can give you is, say in a manufacturing unit, they will be having this, say for example, CCTV surveillance is there, end-to-end CCTV surveillance is there. Every single product that has been manufactured, the time of manufacture, who is manufacturing, whether it is being reaching the warehouse or godown, everything is being captured. So in that particular area, if you see, the test of control is extremely strong. There is a supervisor who goes and individually checks each and every area. So the control is extremely strong. So in those cases, you need not actually go ahead and do an in-depth stock taking or counting. It is taken care of. Say for example, nobody knows who manufactures what, who produce, who is in charge of that particular line, who tests the quality aspects, how the packaging is done, how it is reaching the warehouse. There is no control of how much is being produced, how much stock is there, whether they are ordering excessive stocking is there. They are completely closed. In those cases, your controls are very, very weak. Then you have to physically do a in-depth. So these are the two different audit procedure. Now coming to SA570. Now SA570 actually calls for a very, very elaborate discussion, but I'm not going in depth into that particular SA570 because if I'm starting, it goes for almost 1 hour. So one element I would like to highlight here is, as an auditor, I'm not supposed to check whether there is a going concern. Check, okay, this going concern assumption is there for the company or not. I am not supposed to give a going concern assumption. The duty for giving a going concern assumption is completely on the management, completely on the client side. They have to tell whether this company will be there in the foreseeable future. Now, foreseeable future is not like another 10 years, just 1 year, next 12 months. If the company will be there or if they will be able to continue the business for the next 1 year, then I can say that has to be said by the client. Now, as an auditor, what I have to do is, I need not come up with a going concern assumption. I have to check whether this going concern assumption is appropriate, whether it is right. Say they are already giving an assumption. Now I need not go ahead and give an assumption. Even if they don't give also, I am not in charge of giving any assumption. It is solely their responsibility. What is my responsibility is, as an auditor, depending on whatever audit procedures I apply, whatever audit evidence I obtain, either from the accounting records or from the other records, I said minutes or documents or any other information being shared, or third-party confirmations, I have to see whether this going concern assumption is valid or it is appropriate. So they may say the company will continue for the next 1 year, and depending on that, it may affect my opinion and the report that I give to the management. That point, I have to check whether this assumption, whatever they are giving, will be appropriate or not. Now, if you ask me whether I have to check only the financial elements, means as an auditor, I am supposed to do only that. However, when I am checking the appropriateness of a going concern assumption, I also need to check various other aspects, say environmental loss. child loss, safety issues, whether the company is following that. Say company is going on polluting the environment. People are filing suit or cases against the company. There are lots of cases coming against the company. The government is in a position to shut down the company, ask the company, they want the company to close down. Now, this actually affects the going concern assumption. But if you see the financials, everything is too proper. They've got high profits. They are declaring good turnover. Everything is there. They're paying taxes. Everything legal, regulatory aspects. Everything is pakka. The profits are also good. If you see the financials, the company can go for the next 10 years also without any hindrance. That is the kind of financial stability they have. However, there are areas which can pull them down. Say, for example, they are employing children. Say, firework manufacturing companies we know. Majority of the manpower is children below the age of 15. Now, this calls for a concern for the auditor, whether they are following the child labor laws. Tomorrow, if somebody used a particular entity for that, company has to shut down. Say they are polluting the nearby water bodies. They are polluting, they have smoke from the factories actually causing some health hazards to the people surrounding there. People living in the nearby areas. Now again, it is a thing for concern. People have to be, as an auditor, I have to check into the environmental laws, whether they are complying with that, whether they are giving a safety atmosphere to the people who are living in that area. So when I am checking for the going concern assumption, it is not only the financial aspect. That's what I wanted to tell. We also have to check the other aspects to see whether the company will continue in the long-term basis. Now, sometimes auditor is giving going concern assumption is appropriate. Now, a stakeholder is saying, since in your report you have given the going concern assumption is appropriate, depending on that only I have invested in the company. Within 1 year or within the next 7 months, a company has gone into liquidation, or company has winded up, or company has the company has to shut down. Now, what is the credibility I can attach to your audit? Now, one thing I can tell, we are not astrologers. We cannot predict the future. Only on whatever information we have got, we can give the audit. Now, this particular going concern assumption appropriateness, whatever the auditor gives, it cannot be viewed as a guarantee. It cannot be taken as a guarantee for that particular entity to continue. Say, I have given a appropriate, the assumption is appropriate. Tomorrow the company shuts down. They cannot blame me for that, because the recent events itself to understand and analyze it is difficult. So it is very, very difficult to predict the future. What can come into the future? There is a earthquake, there is a fire outbreak, the entire company is into ashes. Now, can you blame the auditor that your going concern assumption or appropriateness is wrong? No, you cannot. It is never a guarantee. On the time being, based on the evidences, based on the information the auditor gets, doing further analysis, checking all the aspects, I have given the report. But it is never a guarantee that the company will be continuing in the future. So this is one highlighting point I have to tell about going concern. Now, responsibility, I told you, it is only to checking the appropriateness, not to come up with the going concern assumption. Now, if the auditor feels there is something wrong with the assumption that the management has given, there is some material uncertainty. I'm not telling about any slight doubt on the management assumption, but there is some material, they have some concrete evidence, and the auditor feels that the company will not be going, or company will not go for the next 1 year, then they have to raise the issue. Now, this is one element about sufficient and audit appropriate evidence and what they have to obtain, especially with respect to SA 570. One is checking the appropriateness, then whether there is any material uncertainty. If there is any material uncertainty regarding that, go for the management, ask them whether they have any mitigation measures. Mitigation measures is how you can reduce the severity. Is there any backup plan? If this particular element happens, what is the backup plan you have? So these kind of mitigation measures you can ask. If there is no proper mitigation measures, better qualify the audit. You have to qualify the audit. Now, next essay is SA 580. So as I told you, the relevant ones I have just picked and choose written representation. So as we all know, any written statement that is provided by the management, basically to confirm certain elements. And also, basically it is for confirming certain elements. Why I am telling confirming certain elements means, you cannot take this written representation as a full-fledged audit evidence. You cannot take this particular written representation as a full-fledged audit evidence, because whatever procedure we have to apply, whatever evidence we have to obtain, we have to do it. This is only an add-on. Now, when I go for a written representation, say in certain cases, I may not get any evidence. The auditor will be in a very, very tough situation, in a dilemma that he is not obtaining any audit evidence. Sometimes the auditor may get, but it is not sufficient. It is very, very less to prove the stand. Or sometimes he might get evidence, but it is not reliable. It is not genuine. So in these cases, there should be something else to substantiate. So in those times, you go for a written representation. So either when you don't get, or when you get, but it is very less, or you may get a good evidence, but it is not reliable. It is not trustworthy. We are not going ahead with that. Then you go for a written representation. Now, as I told you, is it conclusive? No. Then the thing becomes very easy. You directly go for an audit, get a management representation, and then give an audit report and come out. If it is so easy, no, it is not a conclusive one. First thing is, depends on the ethics of the management. Who is giving the representation? The person who is giving the representation. Don't go for any representation from the lower cadre employees. If it has to be given, it has to be given by a person who has full knowledge about that particular area. Second thing is, the ethics of the management, the integrity of the management comes into picture. How is their value system? What is the culture they are following in the company? Now, when once they have given the particular given the written representation, can I just take it as a conclusive one? As I told you, it is only an add-on. It is only an add-on. Already I should have done my part, collected the evidence. This is only to substantiate it. It is not a standalone evidence. It is not a standalone. Just because I have a management representation, I cannot tell I have got the evidence. It is only an add-on. I repeat, it is only an add-on. And again, one more thing is, in most of the audits, it is one area where it is very, very difficult to get the particular representation. So that is the reason I told you in SA210, whenever you give an engagement letter, make it very, very clear that before the end of the audit, a management representation letter is required as a part of this audit. Now, what does not constitute a representation? This is very clear. Financial statements, whatever claims the management is making, say assertions, or any materials or supporting records, whatever, all this does not include, or it's not included in the written representation. It is a separate written document given by the management, ascertaining what are their responsibilities, what they have done, and what, say for example, financials means whether they have prepared the financials properly as per the framework, and what other activities they have to do. Say if they are safeguarding of the assets, is the responsibility of the management, whether they are complying with the laws and regulations. So all these are again the responsibility. They have to give it in a written form. Now, written representation, whenever it is given by the management, I told you, check for the reliability. Say check for the integrity of the management. Say they may be ready to give a written representation. What if it is given by a person who doesn't have a competence for it? A person who is having a complete understanding of the procedure, who is having that level of integrity, ethical value, he needs to give. Then only it will have a value. Say any junior level employee gives a written representation, means it is as good as you are not seeking a written representation. Now, say if the written representation is not there, you directly don't go and modify the report. However, in certain cases, you go ahead and at least discuss with the management what is the reason why they are not giving, whether they are able to give a reference or give, say discuss with the management, say whether any effect, if they are not giving, whether there will be any effect on the audit. If there is any serious effect on the audit, say you may not have got enough audit evidence, they are also not ready to give a representation. So in those cases, you go ahead and modify the audit. So it is not always when you don't get a management representation, you go and modify the audit report. Check for the relevance of it. And so the final element for the today's session is, I think the basic few standards we covered: SA200, SA210, SA230, SA500. 570, 580. Now coming to the audit report series. So here this is the final one which will be covering 700, SA 700, 701, 705, 706, 701 I haven't mentioned here, but we'll be covering it as a part. Now, if you see, there are 3 essays, but there will be like one PPT where I would have summarized all these essays. Just one PPT, if you understand, you know what kind of opinion to give. Now, the first one is essay 700, unmodified opinion. So, unmodified opinion means what? It's a clean report. It is a clean report. Now, when do I go ahead and give a clean report? So, basically, it tells the auditor how you need to form an opinion and how you need to report. Now, when do I go ahead and give a report? Only when I have got some conclusions. Now, once I got some conclusions, depending on the evidence I have collected, I have some opinion I want to communicate, and the mode of communication is through an audit report. Now, when do I give a particular unmodified opinion? Unmodified opinion means without any modifications, without any queries, without any representations. That means you don't find any fault with the financials. You are extremely happy with the financials. You have got evidence and there is no misstatements, material misstatements. Then you go ahead and give a unmodified opinion. So whenever you go ahead and give an unmodified opinion, there are 3 things you take into consideration. 3 things. Now, every one of us know there should not be any material misstatements. So there could be misstatements. I told you there could be small misstatements, but it should not be material. Say the management is ready to correct, fine. But if there are some uncorrected misstatements and they pose a threat, they are very significant individually or maybe say in aggregate. Say for example, this when I'm telling, say for example the sales, I am just watching the total sales that has happened. Say sales for rupees 5,000, so or 10,000 depending on the company. So this is a very small company. Say 10,000 rupees sale is not being accounted. Example is 10,000 sales of 10,000 rupees is not being accounted. So now for the company, comparing the size of the company, the annual turnover, whatever capital they have introduced, up to 10,000 it is okay. Up to 10,000 it is okay. So that is a materiality level that we have set. So now here 10,000 rupees worth of sales is not accounted. Auditor finds that yes, it is fine. It is much lesser than the materiality level. Say the materiality level is 20,000. It is only 10,000. It has not been accounted. Fine. Now the auditor comes across 10 or 15 such instances where the sales of 2,000 rupees, 3,000 rupees, 5,000 rupees, 7,000 rupees has not been accounted. Has not been accounted. Now, if you aggregate all the sales combined together, all the sales that has not been accounted, it comes to say 62,000. It comes to 62,000. Already we have set a materiality of 20,000 for that company, depending on the size of the company and the other factors. Now, individually, if you see none of the sale value crosses 20,000, it is less than 20, 10, 5, 4, like that only. But together, if you see, in aggregate, if you see, it has crossed the materiality level. Now, that is what is said by the second point. There could be misstatements. Now, when the uncorrected misstatements are material individually or in aggregate, that means individually, say if it is 25,000 one particular sales, then also it is material. Say here there were number of sales together, it came to 62,000. Now in this case also it is aggregate, in aggregate it is material. So in both the cases you go, if there is a material misstatement like this and which is uncorrected, you don't give a unmodified opinion, you go for a qualified opinion. So when there are situations like this, when there are no uncorrected misstatements which are material, secondly, when you have got the evidence, say why I'm telling this is, when you go for a qualified opinion, there is a circumstance when you don't get an evidence. There are areas when the auditor doesn't get an evidence, and there is a special kind of opinion that is given by the auditor also. So here, whenever there is a sufficient and appropriate audit evidence is there, and there are no material misstatements, And there are other evaluations. Other evaluation in the sense whether they have applied the proper accounting standards, accounting policies are followed consistently, whether they are preparing the financial statement as per the applicable financial reporting framework. All this you take into consideration. All this you take into consideration, and if each and every criteria is satisfied, then you go for a clean report. So clean report basically calls for whether you get the evidence. That is the first one. Second is materiality you check, whether there is any misstatements that is material, and then the other evaluations. Other evaluations is especially the accounting estimates. This is one area that normally causes an issue for the auditors. The accounting estimates. Say whatever accounting estimate the management comes up with, the auditor may not be satisfied. Depending on the analysis of the previous financial statements, he may not agree with the accounting estimates. So these kind of evaluations has to be made by the auditor. Say accounting policies. Say whether they are being followed consistently. Say for one particular they are following a WDV method of depreciation. Next year they are shifting to SLM. No, it is not allowed. As per whatever is there for their benefit, they cannot switch on with the accounting policies. So whether there is a consistency for the accounting policies, whether proper accounting standards are applied, whether the accounting estimates are leveled, after all these evaluations, if the auditor finds, then you can go ahead for an unmodified opinion. So if any one of the criteria, say even if you have not got proper evidence, don't go and give a unmodified opinion. Now, format of audit report, I need not explain this. Title, addressee, opinion, everything. So basically here, the important areas I can tell you. Title, to whom, what is the title? It is not just an audit report, it is an independent auditor's report. Very careful about that particular one. Address it to whom, which entity you are doing the audit, the financial year, for the year for which the audit is being done, what elements of the financials you are doing the audit, whether it is balance sheet, whether it is P&L or any other assignments. And the opinion, and the basis for opinion is what is the reason why you have given this opinion, and finally whether they are complying with the regulatory requirements, legal requirements. And here if you see, we also have point number 8 as going concern. So here also there is a separate paragraph in your audit report where the auditor has to comment on the going concern. So such is the relevance of that particular standard. That's why I tell you, if I have to take up SA 570, then I have to take for one whole session. That is such a lengthy topic. Now here auditor has to separately comment whether this particular going concern assumption is true or not. Now, okay. Now next is a very quick run through on the audit report. I told you about unmodified report or clean report. The second is modified report. So modified report, we have modified opinions. That is, you have qualified opinion, adverse and disclaimer. And we also have two other, emphasis and other matter paragraph. I'll be taking you through. Now, circumstances when you go for a modified opinion. So as I told you, whenever there is some material misstatement, or when I am not able to obtain sufficient and appropriate audit evidence, in both the conditions I have to qualify. So one is I'm not getting any evidence. Say I get some evidence but it is not enough, or I get evidence but it is not reliable, or I have got sufficient and appropriate evidence but there is some significant misstatements in the financial. So that I have to point out and make the management, bring it to the attention of the management. So in those cases, I go for a modified opinion. Now comes this very, very, very crucial slide, I would say, because I am not going in depth and explaining each and every opinion. But once this particular slide is there, I think almost what opinion I have to give, on which circumstances, everything is being summarized here. Okay. So I told you, audit evidence, when I don't obtain, normally there is a thinking among even auditors also, when I don't get an audit evidence, I go and give a disclaimer of opinion. Now, firstly, let me tell, whenever you don't get audit evidence, you can go ahead and give a disclaimer of opinion. There is nothing wrong in that. However, whenever you don't have any audit evidence, disclaimer of opinion is not the only element that you have to consider. Even then you can give a qualified opinion. Now, what is the thing that differentiates between disclaimer and qualified? If you see here, if you see the qualified opinion types, there are two types in qualified opinion. One is when you get the audit evidence, and one is when you don't get the audit evidence. So disclaimer also you don't get audit evidence. So this is one area which normally gets even the members get confused. So when I don't get audit evidence, I jump to disclaimer. No, you can still go for a qualified opinion. Need not go for a disclaimer. You can still go for a qualified opinion. However, there are two conditions you have to check. There are two conditions you have to check. In both the cases, qualified as well as disclaimer, when you don't get an evidence, you give that opinion only when there is a material misstatement. That is a well-known fact. Material misstatement is there means you go for qualified or you go for disclaimer. The distinguishing factor here is pervasiveness. Now, what is pervasiveness? If there is any element or any particular account balance that is affecting only a part of the financial, that means only that particular area it is affecting. It is not having an implication elsewhere. It is not having an implication elsewhere. Only that particular area it is being affected. Then it is called as non-pervasive. Say for example, there is a misstatement which affects the entire financial. It has a cascading effect. It affects the P&L, it affects the balance sheet, it affects even the notes of accounts, cash flow, everything it affects. Then it is said to be pervasive. Pervasive means it has a widespread effect. Widespread effect. Now, the distinguishing factor is when you don't get evidence, when the misstatement is material, check for the pervasiveness. If the material misstatement is pervasive, that means it is affecting the financial statement as a whole, then go for disclaimer. However, you don't have this affecting the entire financial statement. It is only affecting one particular area. It is not having a widespread effect. In that case, it means it is not pervasive. So when you don't have evidence, even though it is material, if it is not pervasive, you go ahead and give only a qualified opinion. So this is a basic distinguishing factor between qualified and disclaimer. In both the cases, you may not get audit evidence, but directly don't jump for disclaimer. Check for the pervasiveness. Both the cases, the misstatement will be material, because only when the misstatement is material, you go for a modified opinion. Otherwise, you would have given a clean report. Now, when you go for a modified opinion, check for these two aspects. Basic check is pervasiveness. If it is pervasive, go for disclaimer. If it is not pervasive, you can still hold on to qualified. Similarly, when you got the evidence, it is material and not pervasive also, you can go for qualified. So basically, qualified you can give when you get the evidence as well as when you don't get the evidence, provided the effect is not pervasive. Now, qualified and disclaimer we went through. The last one is adverse. Now, adverse is like everything is negative. Say the best example is if there is a new movie that has been released. If you have seen, whenever we go to the theater to watch the movies, normally before going and booking that particular movie, you will have an analysis. You see the rating. You see the IMDb rating. You see the rating that is given by various websites about the movie. Say some movie, if you Google, say maybe even when you watch, most of the times nowadays, not even for the theater, even if you want to watch any OTT platforms also, you go ahead and Google the movie, see whether it's a good movie. People are very specific about watching movies, they do that. Now, certain movies, if you see, very good rating, 9.5, 10, 10 on 10 and all, you will have. Now, this is similar to your unmodified report. Very clean report, extremely good. Everything is pakka, true and fair view, no material misstatement. Evidence is also obtained. All the other analyses are proper. You go for an unmodified opinion. Now, certain movies, if you see, they would have given like around 6, 7, 6.5, 7, these kind of a ratings. That doesn't mean the movie is very bad or pathetic. it is still watchable, but there are certain areas which calls for improvement. Either the choreography is not good, or the script is not good, or the selection of heroes are not good. There could be some kind of a element which the movie is lacking. It is not up to the mark as expected by the audience. So this I can compare it with a qualified opinion. Qualified opinion. There is a report, but there is a financial, but there are some improvements which has to be done. These are actually causing little irritation. Say if a particular stakeholder is saying that, it may not give a very charming view of the company, similar to the rating. Now, some movies, if you Google, if you can see a rating, like say for example 1, 2, 1.5, or even 0, Rotten Tomatoes and all, there are movies like that. So those movies I can actually compare to the adverse opinion. Audit evidence will be there. You can actually see that the movie has been released this particular year, the movie has been released, everything is there in Google. Now, if you see the movie, it is a flop. It is a flop. Now, it's not only because of flop, even the movie is very pathetic. Everything, the script, everything has gone wrong in that particular movie. So in those cases, similarly, when you have got opinion, you have got evidence, but there are so many material misstatements affecting the entire financial, then you go for adverse. Now, the last scenario is certain movies you try Googling. How much ever you Google, you won't get any details of the movie. You won't get any details of the movie. Now, this is similar to a disclaimer of opinion. Whatever we try, we don't get any evidence. Now, this movie, somehow you're obtaining a copy of that movie and you're watching, then you understand the particular movie is pathetic, so bad, and even the script or so many things are lacking on that particular movie. That means it is material as well as pervasive. So audit evidence is not obtained, material as well as pervasive. So here, if you see qualified, disclaimer, and adverse, only point to be careful about is when to give a qualified and when to give a disclaimer of opinion. So I think with this we have actually covered almost all these standards. And before actually moving on to the conclusion part, 3 areas I have to discuss: key audit matters, emphasis and other matter paragraph, when to give key audit matters or what to give in key audit matters, when to go for emphasis and when to go for other matter paragraph. Now, if you see, these 3 areas will not be there in most of the audit reports we give for companies. Most of the companies may not have these kind of elements. Now, if you see listed companies, if you go to the MCA portal, if you go download the audit report of listed companies, then you can see these areas being highlighted very, very clearly. So when do I go for an other matter paragraph? Now, if I have to tell about other matter paragraph, it is basically like a marketing paragraph. Okay, it's like a marketing paragraph. Now, why I'm telling is, say for example, I'm given the audit of a head office. I'm given the audit of head office. So I have the privilege of using the report given by the branch auditors. I need to collate the branch auditors report, and while I am giving my report, I have to check with those branch auditors report and finally give my report. Now, what I'm doing is, I'm so enthusiastic that instead of not just relying on the report, I'm physically going to each and every branch, doing the auditing and then giving the audit report. Now, in those cases, I'm doing some additional work. I'm taking up some additional responsibility. Now, this I will put in the other matter paragraph. This I will put in the other matter paragraph. So that is why I said it is like a marketing for the auditor. Whatever additional responsibility the auditor takes, I can put it in the other matter paragraph. So these much hard work I have done for creating this particular or giving this particular opinion, I can put in the other matter paragraph. Now, we have emphasis of matter paragraph and key audit matters, which sounds synonymous, but not true. Now, during the course of audit, we may have discussion with the management or with the board of directors or even with the key managerial persons, certain elements which are very, very significant, which requires immediate attention. Now, here, as I showed you the format of audit report, there is a separate paragraph where called as key audit matters. So anything that is very urgent or anything that needs to be shared with the stakeholders, which need to capture the attention of the stakeholders or shareholders, you need to put in the key audit matters. So whatever comes in the key audit matters is basically those those of utmost importance or significance during the audit, especially when it calls for a discussion with the board of directors, means that will be a significant issue. So that is the example that I gave you. You can put it in the key audit matters. Now, there are certain things you want to tell the shareholders, but it is not very significant as a key audit matter. However, you want the shareholders to know about it because you want to enhance the understanding of the shareholder. They want to enhance the understanding of the financial. So for these kind of elements, you put in emphasis of matter. So these are fundamental, these are equally important, but here the highlighting point is the understandability factor. You want to give a clear message about the financial. Say for example, any litigation is there. Say there is an ongoing litigation. The company is not sure about what is the outcome of that particular litigation. This is important, but that is not very significant, but you need to make the stakeholders aware that there is a litigation in process. The future outcome is not known for that particular company. If there is an outcome which is not say supportive, which is not say there is a derogatory or some kind of a negative outcome for that particular litigation, the company may have to pay a huge penalty, which may affect the profits or which may affect the dividend distribution for the company. So these things you need to let the stakeholders know, better understandability purpose. Now these things you put in a emphasis of matter. So I told you key audit matters, those which are significant. Emphasis basically for the important ones as well as for understandability, and other matter paragraph is an additional responsibilities, or I can say it is a marketing paragraph. So I think we have come almost for the close of the session, and I think with this we can wind up. I think I have covered all the major essays, gave you an overview of how these standards are basically. So in the upcoming sessions, I'm sure the faculties will be concentrating on each and every essay and giving you an overview on that. Selva sir. Selva sir, are you there? Sir, is there any question from the audience, or can we wind up the session?
Am I audible? Hello?
Yeah,
Hello?
yeah, so you're audible now.
My microphone was not working. No, there's no question from audience, but audience can unmute themselves and they can ask questions if any. Will wait for 1 minute. We'll wait for 1 minute and we'll wind up, ma'am. Okay, 1 minute. We'll wait for 1 minute. And members, if there is any query, you can unmute and you can post the questions. Also, you can post in chat box. We'll take up any. If not, so the same can be addressed through mail or when time permits. You can post queries to sirccp@ica.in. Let me just check if there is any. Sam, okay, it seems there seems to be not much questions, ma'am, actually. So we'll wind up the session, ma'am. Thank you so much for your excellent session and presentation, ma'am. And hope the presentation will be shared with us for sharing with the members and also uploading in our website. On behalf of SIRC Chairman, Secretary, and if there is an absence, thank you so much for the time.
Okay, thank you, sir.
Thank you, ma'am.